Hello and welcome to My Finance Teacher on YouTube. Today is 2nd of May 2017, and let's have a look at gold, which I think is in the process of going down into the intermediate cycle low, which will probably take place in early summer. So let's have a look at that. In front of you is a daily chart of gold, and this purple line here is the 200-day moving average. Gold has started its decline into the cycle low. However, I think there is a possibility for a temporary bounce up relatively soon, which might probably happen in several days, which might happen early next week. The reasons for that is that gold is now approaching several support levels. One of those possible support levels is the 200-day moving average, which is just below the current price of $12.55. There is another support zone at around just at about $12.50, and another support zone which is represented by this cycle uptrend line connecting some of the previous lows of the shorter daily cycles in gold. A lot of these support zones are converging not far from where the gold price is at the moment. So for that reason, I think we might expect a temporary increase in price over the next several days. Another possible reason for that is the RSI level. This is a 10-day RSI, which is not oversold yet, but it is approaching oversold levels. And additionally, this shorter-term daily gold cycle has been taking place for over a month and a half now, whereas the previous two cycles within this longer-term half-a-year cycle, intermediate cycle, both took just about a month and a half. So we are in a time band for this shorter-term cycle to finish with its cycle low over the next several days, and we are within a time band for a new bounce up. However, this bounce is going to be only temporary, as we are generally in a declining phase of this six-month cycle, intermediate cycle in gold. So those are the support levels that we can see on the daily chart. Now let's have a look at the weekly chart, which is in front of you, and this purple line is now 200-week moving average. On this chart, a more clearly visible support zone is at 1200 rather than 1250. For that reason, it is possible that gold might continue its decline not only for the next several days, but possibly for a week or two. So the reasons for that being that the support levels visible on the weekly chart are much lower than they are on the daily chart. So the gold might continue its decline until it reaches those support levels, either below 1240, which is a 200-week moving average, or even at around 1200. And additional reason for that is that on the weekly chart, the RSI, this is a 10-week RSI, is pretty far from oversold, so there is still potential for the price to move down. So whichever case it is, either the support levels on the daily cycle take precedence and gold continues decline over the next several days and gives us a bounce, then continues its decline, probably gives us another bounce from the level of 1200 and continues its declining phase. So either this scenario plays out, or a scenario where gold continues to decline until we reach close to 1220 or 1200 and then get another bounce reaching this downward trend line, and after that bounce continuing the declining phase of this intermediate cycle. Whichever scenario plays out, it is not critical. What is more interesting is that sometime in the first half of summer, this intermediate cycle will reach its low, this intermediate cycle will finish, and it will probably reach the low close to this lower boundary, which is represented by this triangle consolidation zone. So that will happen near the price levels of 1160 or so, probably. And after this consolidation, relatively long-term consolidation, which has been going on for over a year already, the gold price should move up in earnest, because generally after a long consolidation, strong trends tend to develop. So if the gold is going to move up in earnest, it must break this previous top at about 1290 or so. So this is the expectation for the performance of gold price over the next several weeks. Remember, this is not investment advice. However, I do wish you luck.